Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the easiest, simplest swing trading strategy you guys should be doing to make money consistently from swing trading in the stock market. So I hope you guys all enjoy it. If you do, hit that like button and subscribe. And if you guys want to learn more about swing trading, how to find these stocks that we're going to be talking about today, our strategies, our approach, good entry points, exit points, your full strategy, help you create a strategy. If your goal is to quit your 9 to 5 job and trade stocks, check out our school. It's awesome. It's absolutely fantastic. And you guys can get 51% off by using code TRADER. Only like 2 spots left for that code. So check it out down below. It's awesome. It's called the Swing Trading Masterclass. It's great. So check it out. And guys, let's jump into this. So over the past week or so, we've seen so much volatility from the market. We saw the S&P 500 sell off about 4%. We saw huge and massive AI stocks like Nvidia sell off 8% yesterday. So, when it comes with trading during these times, what are some things that you should be doing? The first thing is to make sure you have a stop loss in place. Doing this will save you so much money, so much headache, and at the end of the day, when you're trading and you're buying positions, any stock can sell off like crazy during this time. Like Nvidia selling off 8%, even though their earnings report was actually relatively decent, beating expectations. So making sure you have that stop loss, and more importantly, don't be afraid to take profit early. For me, when I'm up 1, 2, 3%, making a couple $100, yeah, I'm going to sell some of my shares. The reason why, my goal as a trader is to make money. So when I'm making money and given the market volatility, market conditions, I'm going to get out with some sort of profit here. So let's look at a good strategy here that we took a trade on yesterday. We're already up a couple $100, which is awesome. So let's jump into this. All right. So the first thing here I want to show you guys is the broker. In order to be a good swing trader or a good trader, you need a good broker. The broker I use and one that I would recommend is Moomoo. They offer great charting, scanning. They're where I find like 99% of my stocks. So check them out down below. You guys can get 20 free stock just by signing up. It's completely free. So sign up, use them. They're awesome. All right. So when it comes with navigating swing trading, what do you need? So the first thing you need is a checklist. A checklist is a set list of criteria that you need before you enter a position. So with this stock here, JPM, also known as JP Morgan Chase, you guys will notice that in the past, it's seen heavy support here on the yellow and blue lines. The yellow is the 50-day moving average line. The blue is the 90-day. It hit it, buying pressure, buying pressure, buying pressure, buying pressure, buying pressure, buying pressure. So we know there's great tendencies of getting buying pressure. Recently, it went from 280 all the way down to 250, actually lows here at 253, which is a pretty steep sell-off of about 9%. Now, sell-off like this, I never get really shaken out of unless I'm in the position. But, sell-off historically always just brings opportunity. And that's kind of what I want to talk about a little bit is, over the past 90 years, if you just invest during the crashes or dips, you jump from on average a 10% return if you just invest into the broad market to a 22% return per year. So don't be fearful of sell-off. Sell-off's normal and healthy. And so, a stock like JP Morgan Chase here where it's sold off. We also have the RSI, which is another indicator trading for a 35. The last time it was trading for a 35 was back in this range where we saw this great move. So this point of contact right now could get some buying pressure. Now, let's kind of go over this again. We have a stock on an upward trend, sold off down to a moving average line, undervalued RSI. We know the earnings isn't coming up anytime soon. Holding a stock through an earnings report is incredibly risky. Obviously, Nvidia is a prime example of that. If you're holding a stock through earnings, the chances that it jumps up or down in a dramatic fashion just increases, and that's a little too high for my risk. So the next thing that I do here is I want to go to a lower time frame. So I go to the hourly chart. Now each candlestick now represents 1 hour of trading instead of 1 day. So what we saw here was this. We saw this general downward trend. And this is kind of where being prepared is so important, because we threw an alert above this near and around the 259 area. The reason why we set it there is because this would form a new trend line, right? And it would also be breaking out of the old trend. So my thought process was this, was seeing if we can get this stock as close as we can to this trend line. And we got in near and around that 258 mark, and we'll go ahead and show you our entry. So my thought process was keeping our stops a little bit tighter, about 1 to 2% for a possible push up even to the 200-day moving average line. Gives a 4-to-1 risk and reward there. And you're saying, Carter, why is that important? Well, let me show you why. If you guys were starting out with let's just say like $100, or we'll do 1,000, and you find a stock like this 50 times over the course of a year, risking 2% with a 4-to-1 risk and reward, you're probably saying, Carter, you gotta trade a lot. You gotta be very, very consistent. Well, imagine this. You actually lose 60% of the trades you take. At the end of the year, your $1,000 goes to $2,500, which is astonishing. So you more than doubled your account. Imagine this. You lost 30, or you won 30% of your trade, so you lost 70. Guess what, guys? You are still profitable. So you could win 30% of your trades and still make money over the course of a year. And this is why good risk management is key. So today the stock has popped up about 1%. We're seeing how it reacts to that 90-day moving average line, keeping our stop loss near and around this trend line. So if it dips down, we'll just take our profit and move on to other opportunity. But as of right now, the stock's popping up, which is really, really good. But this is a very, very simple strategy you guys can use to start making money. So if this is your first video for trading, 1, get a good broker, sign up with Moomoo. 2, check out our school. 3, start paper trading, learning, consuming knowledge. You are the result of your actions. So if you're going to complain about not being profitable, but you're not going to focus on education or paper trading, I'm sorry to say, but that's kind of expected. So just understand the long-term outlook of trading, and it's not an easy way to get rich quick. You just got to put in the time. So guys, I hope you guys all enjoyed it. If you did, hit that like button and subscribe, and we'll see you guys in the next one. Take care.